The purpose of this video is to demonstrate the functionality of the economic calendar. The default view for the calendar is the weekly view. This is the most appropriate view to see all the week's events in an easy-to-read, left-to-right format. This view enables you to anticipate the week's most critical events. Note that each event is coded to denote its expected market impact. This allows you to anticipate a given day's or week's volatility based upon the events scheduled. You also have the ability to look at the daily view. The advantage of the daily view is that it renders the data associated with the event in one pane. You have the day's events listed in chronological order, period of representation, name of event, unit of measurement, prior, any revised data, consensus, and actual. The actual and consensus relationship is the key one to focus on because you are having expectations versus result, and that will therefore lead to potential market impact. The key thing to understand about the calendar is its ease of navigation. You can go to any day of any month of the year. And simply by clicking on today's calendar, you'll be brought back to the given day of the current week. One of the first things you should do in order to provide a more customized experience for yourself is to change the time zone. To do this, simply click on the time at the top right of the calendar, scroll over to the time selection drop-down, pick the time zone that represents your physical location, check the Remember Me on this computer box, and click Submit, and the calendar's events will therefore be rendered in your local time zone. Another feature that should be pointed out is the ability to only reflect individual countries' events. Simply by clicking on an individual country's flag, only that country will be represented in the calendar view. By hitting the Reset Country selection, you're thereby taken back to the main calendar representing all of the global events. The economic calendar provides you with the opportunity to learn more about economic events so that you can better understand their impact. By clicking on the Events Definitions tab, you'll see that all the events are listed and categorized based upon their market impact. Market moving indicators, followed by those that merit extra attention, and other key indicators. It behooves one to focus on the market moving indicators first. As an example, I'm going to click on the UK PMI construction indicator. At the top, we're provided with a few sentence definition that explains the event, and also a why investors care, or why is this event important. Here we'll explain the ramifications of the event and how its result can be extrapolated, in this example into future UK economic growth and for companies associated with the UK construction industry. These explanations are written and designed to be easily understood and processed. The Event Definitions tab provides a tremendous amount of useful information. For example, by clicking on the EMU HICP Flash indicator, which is currently a hot button topic within the EMU and ECB, we are now given an easy to understand definition and why this event is important. Again, the language used is not for an economist to determine, but for an investor or for a trader to easily understand and then act on. By utilizing the resources provided in this tab, you'll be better equipped to react to this event and all events following their release. Event data will either be marked on the calendar with a consensus or a report icon. Consensus will provide expectations of a yet-to-be-released indicator. U.S. consensus estimates are formed by an arithmetic mean of 20 inputs. These inputs are actively managed to provide better accuracy, and for most events, the U.S. in particular, consensus estimates are available prior to the beginning of the work week. So as you're getting ready to prepare for your trading week on a Sunday evening, you'll be able to see most of the U.S. events' consensus estimates, which will give you some additional insight into market expectations. Let's look at an example. I'm going to click into the U.S. Consumer Price Index due out this Thursday. Again, at the top, we're going to see the period represented. We're going to see the consensus. We're going to see the consensus range, which is a nice feature to be able to see what's the low end of the range versus the high. So therefore, when the actual data is released, you'll be able to see not only its relationship to consensus, but how far away from consensus based upon expectations of the range is it. We also see the subcomponents of this indicator. Again, we see the definition, the Why Investors Care material, and we have some graphical representations of this event to give us some short-term historical context of trends, along with an interactive chart that will allow us to hover over past releases to see what the released or actual data point was versus consensus. When the event is actually released, the data will then be reflected in a report. To look at an example, let's look at the EMU Merchandise Trade Report. Again, we see the various subcomponents of the event. We have the consensus, and then the actual data will be populated right next to consensus, or consensus range if it exists. In conclusion, the economic calendar prepares you for the important events of the day, week, and month. It also provides you with multiple, easy-to-access views of the data while educating you on their meaning and importance. Lastly, knowing where to find the results will help you interpret their ramifications. Thank you for your time.